Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 12th day of August 2015, and this is the daily report for gold and silver. Very, very strong upside move in the precious metals markets, with gold leading the way, currently trading up almost 1.5%, up about $15, $16. We're looking at spot gold, currently trading, call it $11.24. High just off the highs, 1125.88, and the low intraday, 1102. Silver also catching some upside momentum, as you can see, trading up roughly the same amount in terms of percentage gain, 1.41% higher, or 21 cents. Now, on an intraday basis, we've seen it trade as low as 1512.5 and as high as 1557 on the day. So the question that I posed on yesterday's show, and I wasn't alone, many other analysts had the same question, and that was whether or not the devaluation of the yuan that we saw yesterday, not last night, but the first round, was a one and done scenario, or if it was going to be an extended period of time. Now, based on the fact that now for the second day in a row, we've seen them devalue their currency, it lends me to the belief that they are certainly not done, and it is their attempt, I should say, at some sort of quantitative easing to account for the economic woes that are currently present in China. Now, when we look at that and consider what it has done to some of the commodities, to gold, and to U.S. debt instruments, the beneficiaries, of course, have been the precious metals, one, and U.S. debt instruments, two. When we look at our basic chart, and we're looking at a gold chart, a daily chart, you can see that without a question of a doubt, we have definitely taken off. We can identify in terms of some sort of a pattern, and this is a Western pattern as much as a candlestick pattern, but really this rounded bottom that we're seeing, in which we had these series of lows in the market come in. We also said that we had some real potential resistance at around 1100. Now, there's a couple of charts that I do want to look at today. 1109 is a key number. We've broken through that pretty solidly. But what I meant by 1100 is you can see a series of tops that appear just prior to this move above this price point. And you can also see the acceleration that is evident in the market when we consider once it broke above this point, we definitely saw this market take off to the upside. Now, we are sitting long at 1104.5, and the question, and we also have put in an OCO order, one cancels the other, at about, call it 1028, 1029. Now, do I think that if the market has hit that point, that that's the final step that we'll see? I have to tell you, definitely not. Let's go ahead and pull that chart up, and I'll show you what I'm talking about. So traders, this is the chart that I was talking about. It is a 700 or a half a day chart. It is in Japanese average format, but the key to this chart is the different levels of resistance. Now, we've simply created this chart by going to this top sitting at around 1230 all the way to the bottom, in which the market, I believe, traded at about 1071. And then, of course, on the left-hand side, we're looking at the different levels. Now, one of the reasons that I believe 1100 to 1109, or call it 1110, is so critical is that's our 23% retracement level based upon this most recent sell-off in the market. The next real level that comes in, of course, is your 38% retracement, and that's the level I think that if the market does continue to move higher and does have a point in which to stall a little bit, it could certainly be this point, or it would be this point up here at 1151. Now, these, of course, are really, really short-term moves in the market because we're only basing it on, in terms of activity, call it the last 3.5 months. And these are the various levels that I would look for gold to trade at or attempt to break through. In other words, if it's going to find resistance, these are the key points to find it at. So that's the basic rationale behind putting that OCO order in. But to me, what is really critical in the market is looking at a resistance level, the 61% retracement level, but based on some real long-term studies, our monthly charts. And so traders, this is the chart that I'm really talking about. It is a monthly chart, and we've plotted one basic fib retracement, and that retracement is from the bull run from just below 700 to above 1900. When we do that, we look at our 61% retracement level. It comes in at roughly 1150 to 1156. Now, when you consider the last chart that we just looked at that had a key level at around 1152, to me, this is what is really important on a long-term basis. In other words, the real question we need to ask ourselves is whether or not this rally is the beginning of something big in gold or a simple flash in the pan. The direct answer to that question has to be, well, it really depends on what the Chinese government does to attempt to solve their financial woes. If we see an extended amount of lowering of currencies, a currency war, and a continuation on the part of the Chinese government to attempt to kind of prop up their economy, then we could see, as I said, the beneficiary become gold. However, we need to look at some key levels. And to me, unless we really break above this particular price point, it doesn't signal an extended rally. And so that's what we want to determine over the next couple days or maybe the next week or so as we see whether or not there is a continuation of the devaluation of the yuan. Now, when you consider the fact that the euro has lost 10%, other currencies have lost more than the couple of percent that has happened over the last couple of days, there's certainly room to the downside for further devaluation of their currency. If we continue to see that, I believe we'll continue to see both gold and silver rally, and at that point, we'll determine different price points and targets that we think the precious yellow metal and the precious white metal could go to. For right now, let's stay with our orders as they are. Maintain long positions in gold, maintain long positions in silver, maintain current stops. You can keep that OCO in, but here's the key on that OCO. If in fact we see it barrel through there and not come down again, we'll simply want to re-enter from the long side at a higher price point. But realize, traders, more than anything else, this rally is data driven, and the data is what is the next move that we'll see by the Chinese government. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.